Hi, thanks so much for tuning in. You're watching BQ Prime. My name is Mathew, and we're here to talk about arguably the stock of the day, ITD Cementation. The stock is up over 10% at this juncture. Hi, thanks so much for tuning in. You're watching BQ Prime. My name is Mathew, and we're here to talk about arguably the stock of the day, ITD Cementation. It's a stock that's up over 10% today, and in the year-to-date period, it has nearly doubled. The most recent trigger has to do with an order win, and we're going to talk about the significance of this order and the road ahead for the company. Joining me is the Chief Financial Officer of the company. We've got Prasad Patwardhan joining it. Prasad, thanks so much for taking the time. This latest order win, 3,290 crore rupees, quite a large order in the context of your order book, which as of the end of last quarter stood at 18,500 or thereabouts, from what I can see. What can you tell us about this order?
I'm not able to hear you.
Okay, let me see if I can try
It's a 3,290 crore order.
Yeah. Please go ahead.
Am I audible?
Yes, please go ahead.
So this is a 3,290 crore marine order, and we have to execute it in a period of about 40 months. Overall, our marine order book is about 33% of our overall order book, and the total order book after considering this order is about 22,000 crores to be executed over a period of 3.5 years.
Understood. At the end of the last quarter, there were L1 orders of around 5,500 crore. Is this one of them? Or
Yes.
Do you still... Okay, so you've essentially removed some portion of that. What do L1 orders currently stand at?
Well, there were a couple of large L1 orders. One was an order in Bangladesh, which we announced, I think, a couple of weeks back or so. And this is the second one. So there's no significant L1 order at this stage in our hand. We had these orders, couple of orders, which have been awarded to us, and they have been already disclosed to the stock exchange.
Okay, so 22,000 crore rupees of orders that you currently have in your kitty, and you've had quite the first quarter as well. Your revenues grew at over 67% or thereabouts. And this, from what I have read, has to do with an improvement in order execution. What can you tell us about the quarter that you're currently in terms of the trajectory of execution? And how come you are executing much faster than you did last year?
Well, on a year-on basis, you are right. Our top line has grown by about 60-70% or thereabouts. But there were a few significant orders that were awarded to us in the previous year, and one of them is part of the Ganga Expressway, a highways, 6-lane highways project of about 5,000 crores approximately. And the order execution, which we started sometime in December, January of this year. The execution is really picking up. Last month there was a bit of a lull because of the monsoon, but prior to that, we were doing about 160 crores a month. So this order was not part of our order book in the previous year, a year back. So that, and some of the other orders like the Chennai Metro orders that we won last year, there the progress has commenced, and some of the other orders that are under execution like Bangalore Metro, like a couple of other marine orders, there the execution pace has also picked up. So that has helped us to ramp up the scale of operations this year, and we see a similar trend going forward. Typically, in the past, this Q2 is a bit slow because it gets impacted by the monsoons. This year, the impact has been a little less than it has been in the past. So we might see a bit of a slowdown in this quarter as compared to the previous one, but we expect the execution to really pick up again from Q3 and Q4 onwards.
Prasad, can you help me understand the ticket size of the orders that you have? If you break that 22,000 crore for me and this 3,300 crore order, how does it stack up to the average order value?
Well, we have received in the last 15 months or so, 15 or 18 months, we have received some large orders. So a couple of Chennai Metro orders were about 2,000 crores a piece. The highways project in UP, that is about 5,000 crores. So, the order that we won in Bangladesh a fortnight back, that is about 1,200, 1,300 crores, and this one is about 3,300. So we have been focusing on getting larger orders, and that is bearing fruit, as you can see from these order wins in the last maybe year or 2 years.
Okay. Now, if I look at FY24 as a whole, I believe that the expectation is, or what you had set out for was between 6,500 and 7,000 crore of revenue. Based on your Q1 performance, and I think that was also better than expected, or better than at least the street had expected, are you set to beat that?
Yeah, I think it's reasonable to expect that we'll beat that. Our expectation today is, anywhere between 7,200 to 7,500 crores. And we might be able to do better than that as well. But that will depend on how things go in Q3 and Q4.
What are the parameters that could affect that?
Well, new order wins and the pickup in pace of execution, or some of the input costs that we need to incur. There are many things that could impact the execution. But typically, this is, we expect things to pick up in Q3 and Q4. So, as I said, 7,200 to 7,500, I think we should be able to reasonably do that. Whether we can do something better than that, we'll have to see how things progress.
Okay. Now, in terms of execution and taking on new orders, you've mentioned that you are targeting slightly larger orders. I'm just trying to understand in terms of capability and how much you can scale, because I would think that you would focus at a certain point on execution rather than winning orders left, right, and center. So where would you draw that line?
Well, there are two things. We are focusing on execution, as you can see from the growth in our top line numbers. And in terms of order wins as well, we are focusing on select orders. So it's not as if we are chasing all the orders that come up for tendering. We know which sectors we have the strength to execute and the necessary resources in terms of equipment, in terms of manpower. So we are looking at 3-4 sectors basically. One is underground metro, second is marine, the third is public tunneling. The fourth could be, buildings, industrial buildings or something like that. So we are trying to, focus on these 3 or 4 sectors where we have prior experience and expertise and we have the necessary resources, or we are confident that we'll be able to ramp up the resources in case it is required.
You mentioned that a third of the order book is in marine right now, right? What is the composition of the rest of the order book?
Well, about 25% is urban infrastructure. And the rest would be, it's 25%, and the rest is probably buildings and tunneling work as well.
Now, as I understand it, you have capex that you have lined up of up to 200 crore rupees. Do you anticipate, based on the kind of orders that you're winning, that you will have to ramp that up?
No, I don't think so, because we already have the equipment in place for executing marine projects. Even in terms of underground metro projects, we have tunnel boring machines available with us. So we are trying to focus on orders where we don't need to significantly spend more on capex. In the highway space also, we have about 20% of our order book today is highways, which is one project we are doing in the state of Uttar Pradesh. So again, we are trying to have a judicious mix so that we don't end up spending too much on capex. Maybe we rely on some projects, we rely more on subcontractors, or we hire out the equipment that we require. So we are trying to get a mix so that our cash flows are also not adversely impacted and we don't end up spending too much on capex and starve the projects of the funds that they require to expedite or scale up the execution as well.
So the reason I'm asking is because the space looks like it's very attractive. There are a lot of opportunities and you seem to be winning a lot of orders. But at the same time, you seem to be focusing on keeping your balance sheet very lean. I see that your debt to equity was 0.5x. Is that likely to stay that way?
Well, the debt has gone up a bit because of the capex that we have done. The larger increase was in the previous financial year, that is FY23. This year, the debt might go up a bit, but we don't expect the debt to increase as much as it did in the previous financial year. So there will be a sort of plateauing in terms of, or the pace of increase in the debt would typically slow down. And from next year onwards, we expect the debt to start reducing actually.
What can you quantify that for me, sir?
So we ended the year with a gross debt of about 720 odd crores. As of today, we are ballpark numbers. I'm telling you, we are at a debt of about 800 crores. So the increase last year was about 200 crores. We went up from 500 to 700 plus. So this year, I don't think the debt will go up by 200. 700 may go to 800 or 850 or thereabouts. but thereafter it should stabilize and start coming up. That is what we expect.
The final lever that I want to talk to you about is margins. You mentioned briefly about input costs being or having a bearing on execution, and you achieved 8.8% EBITDA margin in the quarter gone by, and that's in improvement of what, about 65, 66 basis points year on year. Would you be able to keep that trajectory in terms of staying very close to that double-digit mark, or do you think that you can breach that as well?
Well, our first target is to reach double digits, and we are pretty sure or confident that we should be able to reach that number in Q3 or Q4. I think we need to understand that there were some legacy orders where we were actually losing money, and those orders are now behind us. We have already taken a hit on our P&L in the previous year as well as in Q1 of this year. So going forward, we expect an improvement in our margins, especially from Q3 or Q4 onwards. So for the quarter, we are hoping to reach the magical figure of double-digit operating margins. And next year, I think for the whole year, we hope to see an improvement.
Okay. And finally, on an ongoing basis, what according to you is the magic number in terms of size of order book? Because I think, as you say, execution has picked up quite dramatically. Your shareholders will be quite keen on understanding where you see the magic number.
Magic number would be somewhere 1,000 to 1,500 crores is something that we would look at. There are not many orders with a value of, say, exceeding 2,000 or 2,500 or 3,000 crores. So magic number would be, we would like to focus on probably lesser number of orders, but larger in value. So that, we can really, the fixed cost can be recovered faster, and the margins also tend to be better on larger projects.
And in terms of overall orders, what are you comfortable with executing? So would a 25,000 crore order book be something that you can comfortably execute?
Well, I think we can. 25,000 crores should not be difficult. The only thing that we need to factor in or keep in mind is the capex that is required. So if the new project is capital intensive and we need to invest more in construction plant and equipment, that is something we need to look out for. If it's in the sectors where we have the necessary resources, then we are okay with 25,000 or even a higher number than that.
Fantastic. So a pleasure speaking with you, Prasad. Thank you so much for joining in and for giving us that clarity, and look forward to speaking to you real soon.
Thank you, Alex. Pleasure speaking to you as well.
All right, viewers, there you have it. Stock of the day, like I mentioned, ITD Cementation. We'll touch base with them very soon to figure out how that project is going, and of course, the rest of the business as well. Lots more coming up over the course of the day on BQ Prime, so do stay tuned.